Ladies and gentlemen, good day and welcome to Q2 and H1 FY2024 earnings conference call of JK Lakshmi Cement Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you.
Yeah, thank you, Yashasri. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q2 and H1 FY24 call of JK Lakshmi Cement. I need to highlight that JK Lakshmi Cement is also the holding company of Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, CFO of JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that we made or discussed on this call may be forward-looking statements related to future developments based on current expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and the results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to publicly alter or update these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Mr. Vaibhav, and good afternoon, ladies and gentlemen, and welcome to this Q2 FY24 call for JK Lakshmi Cement. We had announced the results on Thursday, so you would have had sufficient time to go through in detail about the results. So nothing much to mention, and we can throw the floor open for question answer so that we can accommodate more questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir, and congratulations on good set of numbers. So the first question, yes, sir. The first question is on the volume front. So if you look at the 1H, we have done 9.4% volume growth on a consolidated basis, I am talking. And we were looking at 19% kind of a growth for this year. So if I do the maths, then for the second half, we need to do close to more than 27% kind of a growth. So just trying to get your sense, how are we looking at this number for the full year?
So thanks, Shravan. During last call also I had mentioned that 19 was the projection to start with. But last call we mentioned that somewhere we are going to be growing in a double digit, right? Which is about, let's say, 12 to 15% kind of thing. So I'll give a range of 12 to 15% of growth, volume growth for the year 24.
Mr. Shah?
Second, on the pricing and the profitability front, so we have seen a decent increase in the East prices, particularly in September, and also channel check suggests some rollback has happened. But for us in Chhattisgarh, particularly where we have a sizable presence, there we haven't seen that much increase. So broadly, from the average of Q2 in North and particularly East, how are the prices currently versus the Q2 average, and in terms of the profitability where we were looking at 1,000 rupees kind of a EBITDA per ton over 12 to 18 months. So is the deadline remains the same, or can it be done even earlier also?
So, Shravan, I think the last questions I would ask, reply the first. So, yes, I think 18 to 24 months time period for 1,000 rupees EBITDA, that remains intact. So, that is what I think we are working, and will be inching towards that, because, a lot of actions which we had taken, now all those actions will get rectified. So, this is part 2 of your question. Part 1 was about a price increase in eastern part of India, and also perhaps, north and western part of India. So, perhaps that, prices have increased, at different point in time, right? So, I think east, you will have, some improvement in this quarter, because the price increase happened somewhere around, September mid and then October, right? So, benefit will come as far as east goes in this quarter. This is one. Second, as far as north and west goes, prices are going to be roundabout, because November is going to be low month in terms of volume because of Diwali, but December onward, I think things should be all right. So, demand also will improve, and so would be the pricing. So, on an average, I see increment of about 550 rupees to about 100 rupees. I'll give a range of increase over last quarter.
Sorry, sir, 50 to 100 rupees increase on QOQ basis one can expect.
Yeah.
Okay, got it. Understood. Second, in terms of the expansion, so definitely clinker we have started at Udaipur. The grinding 2.5 million ton. Previously, we were looking at Q2 FY25. Are we planning to prepone this one?
Yeah, we hope to do that, and towards March or April, we will be able to commission the 2.5 grinding unit at Udaipur.
Okay. And then in terms of the for the next phase from currently post the Surat that we have announced 1.35 million ton. So there also, if you help us in terms of 2 years we have mentioned, but will it be a 1H of FY26 where we are looking at to start, and post the next expansion in terms of the reach of 30 million ton, we were looking at first Durg plant and then the Udaipur. So when we will be going to announce that expansion?
That you are right. It will be first half of 2026, which is a 2-year timeline from now. And that we are trying to see if we can do it in phases instead of entire 1.3 coming in one shot. If we can do initially a bit half of that, and then within 6 to 8 months do the complete 1.35. And yes, we'll be at appropriate time announcing the brownfield expansion which are in the pipeline, as you rightly mentioned, Durg, and followed by Udaipur, and then followed further by the greenfield at Nagaur and Kutch.
Okay. Last couple of data points for this quarter. So trade share, premium share, blending ratio, lead distance, roll rate mix, fuel mix, and kcal cost. And also the non-cement revenue.
There were a bunch of questions, so maybe I will ask you one by one. So,
okay.
It's at 62%. Blended
sorry, I didn't hear.
62% of trade.
Okay, 62%.
Yes. Lead distance is 387 kilometers, so we have brought it down further, right? And is about 65%.
Sorry, 65% is what, sir? Blended. Okay. And the railroad will be the 90% will be the road that will remain the same. Premium share will be last time it was 27%.
So road, I think rail depends, because most of the if you reduce your lead, better to go by road than rail, right? Okay, and that is what as our lead goes down, I think dependence on rail will decrease. But once that 2.5 million ton comes, then perhaps I think
Sir, I was asking the premium share and the non-cement revenue for this quarter.
Premium is 23%, right, of trade sales. Okay.
And non-cement is 130 crores.
Mr. Shah, I request you to join back the queue for follow-up questions. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We'll take the next question from the line of Rajkumar Das from Navodaya Enterprises. Please go ahead.
Yes, thank you for the opportunity, ma'am. Sir, my question is, in the last conference call, you have given information about the approval for your two railway siding and conveyor belt. So can you give its current status and timeline by when it will be completed?
So on railway siding, we have already started our job. We got that approval. We have started our job, and that is going to get commissioned somewhere around quarter 2, quarter 3 of next year. So this is what the plan is. On conveyor belt, that approval process is still in progress. We are progressing well. Maybe when we talk next, I think we'll have some update on that as well.
Okay. So my next question is, what is your view about the expansion of those plants, and when can you announce the new expansion? Expansion of those plants?
On the railway siding, once we have done some concrete steps have been taken, then we'll announce that. Presently, we are evaluating various options of because the clinkerization, while it will happen at the mother plant at first, the grinding units we are trying to look for the various split location places. Once those are formed up, and then we'll announce. And if things go as per plan, then hopefully by in this financial year, we'll certainly do that.
Thank you, sir. Sir, we are a very old shareholder of JK Lakshmi Cement, and there are so many times we ask so many questions on your email, but there is no one who replies us. Sir, this is my humble request. Please reply our email. Whether if you want to reply on your NSC, BSc or public domain, we don't mind. So this is my last humble request to you.
A dedicated email for all the investors' queries. If you put in your request on that dedicated email, it will get answered immediately. I'm not sure whom you are sending your request to, but there is a dedicated email. You can see that it is available on the website as well as on our annual report. I don't remember the full email ID, but it is there, and if you upload your questions on that and send your email on that, certainly all questions, all the investors are getting responded to. But certainly, the only thing, we can't give specific information to one particular shareholder. If there are any data points to be which you require, certainly share that with you, as we are doing with the other investors.
Okay, sir. Thank you, sir. Thank you. That's all from my side, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We'll take our next question from the line of Mangesh Badang from Centrum Broking. Please go ahead.
Hello, sir. And congrats on good set of numbers as well as commissioning of the Udaipur unit.
Thank you.
Sir, my question was, now we have reached 10 million tons of clinker capacity. But after the clinker and the grinding unit coming up, there is almost a gap of, say, 5 to 6 months. So I was just wanted to understand that would we be selling clinker till then? And if it is so, then would it impact the profitability in this meanwhile?
Yes. So yes, you are right. There is intervening period. There is a gap between our clinkerization and grinding capabilities. So whatever clinker we are going to produce in the intervening period, part of that will be utilizing in some of our outsource unit, one. And of course, I think, our clinker sale will go up a little bit because we'll have, availability of clinker. And since we are kind of through this, phase of kind of stabilizing our kiln too, so we want to kind of, produce clinker whatever we can. So the plan is two-pronged. One, outsource grinding stations which we have within our fold, and second, also selling little more clinker during this time.
So which are these outsourced grinding units? Is it Amethi?
No. Amethi, I think, is part of it. We are taking from it. So Amethi, it will not go to Amethi, but we have one outsourced unit in Gujarat and one in north part of India, Punjab.
Okay, and what would be the capacity, sir? Just wanted to understand how much incremental volumes it can generate from.
So, I think what we see that we are going to produce clinker to the capacity of about 50% or 60%, because this is the stabilization phase, right?
Right.
Out at 50%, if you take half of that, or maybe about 40% will be grinding it, because Rajpura, Punjab, I think we have a good capacity, so this is up to us how much we can really consume out there. So there is no limit as such, in terms of grinding. So that capacity is available there. And in Gujarat also I mentioned you, yes, I think we can increase not to a great extent, but a little more there as well. And third option also, I think our Surat unit, right? So I feel that, we can further improve our utilization out there. So we'll use there as well. So combination of these three is going to consume about, 40 to 50% of clinker, which will be producing during this interim period.
Okay. Thank you, sir. So, and secondly, we mentioned that we are currently operating at almost 100% clinker utilization. And the clinker capacity that has come in, I know basically the matching grinding capacity is going to come later. So that 75% cement utilization and 100% clinker utilization, would it remain the same for at least this and next quarter? Till the new capacity comes up, only increase probably could be, higher clinker sales, but overall cement volume should remain the same that we did in this quarter?
There is some turbulence, there is some earthquake in Delhi.
Okay.
Yes, hold on for a moment.
Just hold on for a minute.
Okay.
Yeah, it has stabilized. Yeah, please go. Sorry, can you repeat your question?
I hope everyone is okay and if it's not very severe.
Yeah.
Sure. Go ahead, please. Yeah. So, sir, my question was that we did 75% cement utilization and 100% clinker utilization in this quarter. So this would remain the same, right? Because we will not be able to use the new clinker from Udaipur to come. Or is there any arrangement through which we can utilize some of the clinker inside and still be able to produce more cement? That's what I wanted to know.
So if you look at, our capacity utilization of cement grinding was 73% last quarter, right? And that is what I mentioned you, that we do have scope within our system to consume clinker. If something is still left over, then we'll go to outside.
Okay, sir. Okay, fine. That's it from me. I'll come back in the queue.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We'll take our next question from the line of Sanjay Nandi from VT Capital. Please go ahead.
Hello.
Mr. Nandi, can you please speak a bit louder? Please use your handset mode.
Yeah, am I audible?
Yes.
Yeah. Sir, can you please throw some lights on your petcoke consumption, like what kind of inventories we are holding as on date, or what is the thing as on date?
You have asked about inventories, right?
Yeah, inventories, or whether we have added something in this particular quarter or we are holding something from last quarter. Like, what is the exact inventory placing as on date?
Inventories, especially the petcoke, we have about 3 months consumption available with us.
Okay.
And in this quarter, the Kcal was about 2.04 overall, and we expect it to be about 1.9 in the next quarter.
Okay. So which means we can expect some price drop from the power and fuel first run into this petcoke.
Right, about 5% in terms of the cost of the fuel. You are right.
Got it. So that's it. Thank you so much, sir. I'll come back in the queue, sir.
Thank you. Participants may please press star and 1 to ask a question. We have a question from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So, a couple of questions. So, first, I wanted to understand our accounting policy. A couple of quarters back, you had indicated that whatever transactions with UCW, we do recognize it in expenses as well as on the revenue line. I think in the subsequent quarters you had indicated that we will only treat it as one line somewhere as a conversion cost. Sir, can you please highlight what the status is like over here? I just wanted to understand that. So that's the first question.
Yeah, that is basically earlier what we were doing when Udaipur was to get its clinker converted into cement from the grinding units of JK Lakshmi. Earlier what was being shown as clinker sale initially, and then they purchased back the cement. In the process, to the extent of the clinker, it was getting double accounting. So now we have not, they are not showing any clinker sale for any conversion from clinker to cement. And whatever cost we are charging, they are loading that as part of the cement cost. So there is no duplicacy as far as the clinker. So that has been done with effect from 1st April 22. That was done. So that is what we had done. Now there is no duplicacy. But we are also sourcing some cement from UCWL, for which if we are not supplying any cement, then any clinker, then obviously that is shown as clinker cement purchased from that. So the better way of seeing and analyzing the result, as we have always been mentioning on the call, is to see on a console basis, which we are giving in our press release, both and the numbers, etc. So that will give you a fair idea of what the overall picture looks like in terms of EBITDA per ton on a console basis.
Right. Sir, thanks for the explanation. So just as a follow-up, I was looking at the related party transaction what we have put out.
Right.
When I look at that number, the number is around 264 crores. That is the purchase of cement / others
Right.
from UCW. So even if I look at JK Lakshmi on a console basis, this number is like nearly 35% of the total raw mat, including inventory change.
Right.
How should one interpret this? Because 35% looks a pretty steep number given the intercompany with UCW.
This you are talking of which figure and for which period you are talking of?
Sir, I'm referring to the first half numbers, the related party transactions, what we publish. We just looked at the numbers on the purchase that JK Lakshmi had from UCW. This is only purchase for cement and others. This does not include, I think, fuel. And this number is 264 crores. So versus the total raw mat plus inventory change on a first half basis is 763 crores.
Right.
So of the percentage of total, or even on a console basis, this number looks very high at 35%.
35% of what? 35% we have to see on a total turnover basis, not on a cement or a raw material basis.
Sir,
you have to see link turnover, not to the cost of the material consumed. Link it to the turnover, you get the answer.
Sir, why would that be so? Because you are purchasing something from UCW, which is a subsidiary. So, right? So you are saying that this is all cement. There is no clinker over here?
No, there is no clinker, obviously. There is no clinker.
So 264
but
crores of cement.
You see that it gets eliminated. If you see on that console basis, it will get eliminated.
Sir, the net, if I look at it on a net basis, also there's a difference of 150 crores. So because sale of cement and clinker, what is written is 114 crores. The purchase of cement is 264 crores. So the difference is 150 crores.
Can you repeat that, please?
Sir, if we look at on a first half basis, the purchase from UCW for cement / others is 264 crores. The sale amount is around 113.
Are you reading this? Can you tell me?
Sir, purchase of cement / others is 264 crores.
Yes.
Sale is 113.7 crores. So the difference is still 150 crores, 150.9.
I'm not able to see where are you reading it from.
Sir, I'm referring it to the related party transactions, or probably I'll drop your email, sir.
You see the P&L, please. The purchase of cement, I'll read out purchase of stock in trade for JK Lakshmi. What figure you have? 404 crores.
Yes, sir.
UCW standalone is 113 crores.
Sir, I'm looking at it on a first half basis.
Yeah, first half. I'm also talking of first half only, please.
Right. So, on a console basis, raw mat consumed is 227 crores, purchase of traded is
276 crores, please.
It's 227.5, sir, raw mat consumed.
I don't know where are you reading it. Is published is 276 crores.
Okay. So what I'll do is probably I'll drop you an email. We have the numbers from the press release on day.
You have my number. You can speak to me also. Maybe tomorrow or after this call.
Perfect, sir. That would be helpful. Thank you so much.
Thank you.
I'm not catch the number which you are talking of. Where are you referring it from? No worries. You talk to me after the call.
Sure, sir.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good evening, sir. My first question is on your profitability improvement. In the past, you have talked about several measures which will drive improvement in your profitability unit EBITDA by around 300 rupees or higher over like 18-24 months, as you highlighted earlier today also. This quarter, we did see that around 140 rupees kind of improvement in profitability. What particular element would have driven this on a Q-on-Q basis?
The combination of things. So, of course, I think our volume this year were better than last year same quarter. One. Second, improvement in realization, which is combination of pure price increase, what we call it, and then the top line levers like I told you about trade sales, geo mix, and premium products. So these are the contributor. Of course, I think on manufacturing and logistics also we have done quite a bit. So we have reduced our lead. Last quarter it was 387 kilometers, which is about 13 kilometers lower than before. And apart from lead, I think there has been some actions at manufacturing end. Okay, so I think on AFR improvement is a little bit, though I think we do not have still full-fledged capability at our plant, which we are working on. So there also I think we have increased the AFR and hence reduction in fuel costs. And of course, I think softening of fuel costs also has helped a bit. So combination of things, something which is external, which we got benefited, and some actions internally on top line and cost base, which we have worked on.
Right. But trade mix has largely remained, trade mix and blended cement mix has largely remained similar, right? Q on Q, that particular aspect would not have contributed.
No, trade sales has gone up, no? It's 68% from 58, 62 to 58. Right? A good increase, right? And what is not visible on the figure is, which I think anyway we work internally, is geomix, like selling material in the low trade zone area where our realization is better. Okay. So there are set of actions on logistics costs, on direct dispatches, on warehouse costing, on trade sales. So all these actions put together, I think that has really helped us. And maybe I think we have not fully realized all these actions as yet, because some of the actions are still work in progress. So you'll see that gradual improvement, and that is why I took that time of 18 to 24 months.
Okay. And prima facie, we have done good improvement this quarter, but prima facie, the next 2 quarters should look better than this quarter, right? Based on spot pricing and cost and etc.
Yeah, demand is going to be better, and some of the actions which is work in progress, that will also get fructified. So my belief also is that it's going to be better than last quarter.
Okay. And what is your net debt position as of now, and what will be like peak net debt which you are looking at on consolidated basis with the expansion project which we are undertaking?
Yeah, we are today, as far as JK Lakshmi on a standalone, we are having a gross debt of about 680 crores, and net of cash is about 140 crores. So on a console basis, it is 1975 as of September, on a gross debt basis and about 1175 on a net debt basis. Going forward, seeing various projects which we are doing, we feel our gross debt in JK Lakshmi would reach out to about 880 crores from 680 presently in the coming 6 months, and then that is FY24, and to about 1,000 by March 25 on a standalone basis. And net of cash will be around the same level, 140, 150, and around the same level as of March 25 also. So there will not be any major increase in the net debt on a standalone basis from the present level of September to March 24 or March 25. But yes, on a console basis, certainly the number would be larger because of the fresh loans which we are taking for UCW expansion. So there we'll see from the present gross debt of 1975 will peak out to about 2,400 by March 24 to 2600 by FY25, and a net debt position on a console basis from the present 1170 odd to about 1,600 crores and then 1,800 crores by FY24 and 25.
Okay. And FY24-25 on console basis, how much capex is factoring in this on a year-wise basis?
Yeah, we are talking of a capex in as far as JK Lakshmi is concerned. In the current year, we are talking close to about 500 crores and 700 for UCW. Next year, JK Lakshmi another 500 crores and 100 crores remaining for UCW. So we are talking of 1,200 crores on a console basis, the capex in the current year, 500 for JK Lakshmi and 700 for UCW, including their expansion. Next year, again 500 for JK Lakshmi and 100 odd remaining for UCW, 600. So 1,200 in the current year, including whatever has been spent in the current 6 months, and 600 in the next financial year.
And any new projects which we take up may reflect in FY25 number, if any new expansion.
In addition to that, if we announce as and well, these numbers which are shared with you talks of only the announced projects like Surat grinding unit, conveyor belt, railway siding. But once, as and when we announce the expansion at Durg, that will be in addition to that.
Right. Conveyor belt has been very sticky in terms of clearances for years. So has that been now sort of sorted like at Durg?
Yeah, broadly yes, because there were two parts to that approval which were required. The bigger one approval, which were more time consuming, was the railway siding. So that has come, and hopefully in this quarter the conveyor belt green signal would also come for that. So thereafter we are talking of about 8-9 months for conveyor belt and about a year for the railway siding.
And one last question on Gujarat market. So after while the Ambuja acquisition has not completed, but is there any expected increase in material from Sanghi Industries in your core markets in Gujarat post that acquisition completing?
Sanghi per se, I think I have not seen that in quantum has increased. Little bit increase, yes, of course. The kind of demand which is there in the market is not at all disturbing any dynamics. Not much increase, little bit increase. I think I would say they have gone back to the normal level which they were doing, right? So nothing beyond. So once they are coming full-fledged, let's say to 6.1 million ton, then I think that we need to see. But as of today, I think things are business is as usual.
Sure. Thank you, sir. These are my questions. All the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 now. We have our next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good evening and congrats on good set of numbers. First on the this non-cement revenues, 130 crore, how much was the RMC? And on this 130 crore, what was the EBITDA margin, please?
This is basically margins are low here in the non-value-added business. In this quarter, it was 3%. And out of the 130 which we told you, 60 crores was this RMC, 50 crores AAC, and 20 was POP.
Sir, on company level pay, all these trade, non-trade, and blended, you share those numbers. They are all on a console basis or standalone?
Standalone JK Lakshmi, yes.
Oh, okay. Possible to share these numbers on console basis because, as you say, we should consider this company more on a console basis.
Yeah, we'll share that also.
Yes, we'll share that. It will be the same level.
Broadly, it should not be a material difference.
Okay.
Plus minus 1-2%.
Yeah.
Okay. And this quarter, we have seen this trade share now improve from 55% in Q1, which remains so around similar level full of FY23 to now 62%. So is this some conscious effort to inch up trade share, or it is just as the non-trade volumes have been lower and that is why the trade share is north of 60%?
No, Ravi, I think this is a design one, not something which has happened by default. Right?
Okay.
Yeah.
And again, on your green power, how much was the consumption, sir? 30% in Q1 and in Q2, and what is the outlook?
We had talked of that we have now started sourcing the 40 megawatt of green power or the solar power for our Durg plant. So by virtue of it will be on a renewable basis jumping up for Durg to 80% from the present 36% as far as Durg is concerned. On a console basis, on all the plants of JK Lakshmi taken together, then we are talking of about close to about 35% by way of renewable in this quarter.
Okay, and this will inch up when the Durg sourcing increases. And AFR, sir?
October, so obviously this will go up.
Yes. AFR share was how much in volumetric terms?
What, sorry?
AFR, alternative fuel.
AFR, I'll give you in terms of TSR, thermal substitution rate, is about...
We have taken up that project for increasing the TSR, so that will increase our TSR from 4% to 12% and ultimately to 20% in phases.
Okay, and this year, what is the target from 4% FY23?
So, Durg, we do not have any capability as such, and more so because we always compare, the other fuel cost versus AFR. So, we'll be around, 6% around at Durg. We'll be around close to overall 6% in Sirohi as well, because, Sirohi right now is doing less than 4%. So, first phase of AFR maybe will start during last quarter of this financial year. So by end of this year, I think we'll reach there about 6% there as well.
Okay. And so last question, first half you have clocked 10% volume growth, or the second half you have surplus clinker now that your clinker plant is operational in October. So what sort of volume number, my understanding would be that you are already in shortage of clinker. So given the surplus clinker, would you be able to ramp up the Udaipur second line much faster, maybe reaching 70-80% utilization in Q4?
Yes, so the effort is that only, Ravi, so we'll have, wherever, capacity utilization has to go up, that will go up, and we'll try to expedite that, upcoming grinding stations as well, right? So,
okay.
That is what the effort is. So let's see how fast we can. Team is there on the job.
Okay. Great. Great, sir. That's all from my end. I'll come back in queue. Thank you.
Thanks, Ravi. Thank you so much.
We have our next question from the line of Uttam Kumar Shrimal from Axis Securities. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on the good set of numbers. Sir, what has been our fuel mix this quarter? Paid coke and imported coal?
In this quarter, we had total paid coke of about 46%, 38% was coal, and balance was the other.
Okay. And sir, what is the current status of wall putty plant in Alwar and AAC block in Aligarh that we are setting up?
Yeah, so Aligarh we have already commissioned, and we have, gone to a capacity of about, let's say, 75% of utilization. So we are already doing about 11,000 cubic meter a month. So more or less we have stabilized our Aligarh plant. As far as Alwar Putty plant goes, it will take some time because, now this job is not happening because of the ban, NCR entire construction activities has been banned, right? So this is going to be little bit delayed on account of this, right? So, but our target is to, do this, trials by end of quarter 3.
Okay. And sir, any target that you have set for your VAP business, value-added product business? Earlier, I think it was around 500 crores, and I think this year we will cross that 500 crores in terms of our value-added product. So, any new target you have visualized for your value-added product business?
So, value-added product, I think our ambition is to take it to 1,000 crore level, right? By the end of 2728. Right, this is what the plan is. So right now we are at 500 crore level. So another maybe 3 years we'll go to 1,000 crore level.
Okay, sir. That's all from my side, and all the best to you.
Thank you, Srivali. Thank you.
Thank you. We have our next question from the line of Raghav Maheshwari from AMSEC. Please go ahead.
I just wanted to know the new proposed grinding unit at Surat. What is the clinker? So it's from the import from the Middle East, or we have the surplus clinker available at a Dabok or the Siroi location?
So we'll have, I think, combination of them. So of course, I think Siroi also we are contemplating if we can really increase further, efficiency with less capex involvement. Little bit more clinker from Siroi or JK Puram. So that is one. Second, of course, I think we'll take some clinker out of Udaipur. And third is going to be import if at all we require.
So what is the cost difference on the landed at a plant? What is the cost difference between import and the transferring from the either Dabok or the Siroi?
So that depends, I think if you talk me like, maybe 6-9 months back, then import was cheaper, right? But now, since fuel costs and other things have softened a bit, then I think house clinker is little better. But I think import has always been comparable. Import is not as high. So if you really want to run your plant and you do not have clinker, then that also offers a very good opportunity.
Okay. And sir, last question from my side for the Gujarat market particularly. Gujarat market is primarily after the Sanghi operational when it will go for the Adani management. What we are hearing, Adani will introduce ACC as a new brand. So how will you see the Gujarat market and particularly South Gujarat market, which is one of the strongest market of the JK Lakshmi? Because this is my understanding, most of the material evacuation from the Sanghi is practically possible for only the South Gujarat and the Mumbai market because of the sea route availability. So it will impact pricing pressure on this market. How will you see particularly?
So my reasonable assumption is that this will not impact as such. Maybe a little bit, but I don't think, because a market is big. That, some of the markets which you name some competitors, they are supplying to other markets also, which is, as lucrative as, Gujarat is, right? So I don't think that, price dynamics is going to change drastically. That will happen, to the extent of, it normally happens because of the cyclicity and demand-supply situation thing. But not per se that, additional volume is going to really disturb the market prices.
Got it, sir. And just wanted to check one thing. Why the plant for the UCWL for the cement grinding is delayed so much compared to the clinker? Because we have already commissioned the clinker in the current quarter, and we are proposed to the commissioning for the cement is approximately after the 3 quarters. Why this gap? Because of there isn't any environmental clearance issue or something else?
So I think this is what our project plan was. If you recall all those calls, we have been telling that, around October our clinkerization will come, and during, last quarter of this financial year, grinding will come. If you remember, I think we also had in the intervening period, COVID issues, global supply chain issues, right? So this was, the project plan itself like this, that will, install that clinkerization first, and then we'll go to cement. So as such, there is no delay. Our plan is going as per the plan.
Yeah. There is a lag from the start only, from the project planning, I guess.
Yeah. At that point in time, based on that global situation and supply chain issue, we planned that way. And that was the prudent, at that point in time.
So meanwhile, that will clinker produced by the UCWL will produce internally, or we will go for the clinker cell from the UCWL plant?
So I think some of the, gentlemen, they asked this question. So the, order is like this. So first we'll consume whatever clinker we'll have to our internal, grinding stations which we have, one. Second, we'll go to some of the outsourced unit where we have, some surplus grinding capability. And third is going to be clinker cell. But of course, I think clinker cell is going to be little higher during this intervening period.
Got it, sir. Got it. Sir, thank you for your detailed explanation. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Aman Agrawal from Equirus Securities. Please go ahead.
Yeah, good evening, madam, and thank you for the opportunity.
Sir, can you please use your handset mode, Mr. Agrawal?
Yeah, is this audible now?
It is very low.
Hello?
Yeah,
is it audible now?
Yes, please go ahead.
Sir, two questions from my side. First was with respect to demand in the eastern region. A couple of peers have highlighted some subdued demand growth, mainly in the eastern region. What's the kind of situation that you are facing, and going ahead, what's the kind of growth that you see for that market?
So, whatever information I have got, the demand during last quarter in the east was the highest, in terms of, percentage growth YOY, right? Followed by other markets like, north, west, and south. So my information and my intelligence is little different than what you are saying. Even going forward also, I see that east is going to grow in double digit. Because east we need to understand this is, predominantly IHB driven market, right? And I think this market is going to grow in double digit going forward also. 8 to 10% growth I see going forward as well.
Understood, sir. And the second question was with respect to our expansion plan. Now, we already tried for acquiring a much more sizable capacity in the western region. And now, recently, we have announced 1.3 MTPA expansion in another in west region. So, going ahead, can we expect more of such expansions to be announced in the western region itself for JK Lakshmi?
That call will take depending on the demand supply, but as of now, we don't have anything in the offing.
Sure, got it. Thank you.
Thank you. A final reminder to participants to press star and 1 to ask a question. We have a question from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah. Good evening,
Mr.
sir. And yes, am I audible?
Yes, please go ahead.
Great. Good evening, sir, and thank you for the opportunity. Sir, two questions. One is, what is the rationale to choose the new 1.35 million ton grinding unit in Surat? Is it better demand? Because I'm saying that if your existing unit at Kalol is much closer to Ahmedabad, which is a buzzing center as such, and also it will have a lesser lead if at all clinker has to come from Sirohi or even Udaipur Udyog for that matter. So my question was just trying to understand what is the rationale. Is it higher demand? Is that market more profitable for you? Is there an outlook that you see is much better? Because we could have also, we had Kalon as an option. We could have also had Jharli as an option for the grinding unit or some new grinding unit location in NCR. So just trying to understand why
Surat? Thank you.
So there are a couple of reasons, Naveen, why did we choose Surat. One, of course, I think the demand, projection demand, the way demand is going up, so Surat was already touching to its capacity. So we thought of putting there because we have almost exhausted our capacity at Surat. One. Second, if you know the geography of Gujarat, South Gujarat is a better price market than North and other part of it. Though I think your lead is little bit more. So I think price-wise this is quite stable and prices are also better. And the third and important consideration is that this also gives us an opportunity to enter into that Mumbai market, right? Because the way Mumbai market also is going, I think Surat is going to be a good source of supply in the neighboring area or bordering area of South Gujarat, right? So these were the three considerations, right? Why did we choose Surat?
So does this unit also have incentive benefits? Surat will have incentives, grinding units related incentives, any sales, GST refund or something?
Yeah, we are trying to see if we have already applied. We have not got the confirmation, but we are trying to see if we can get some incentive there for this additional grinding unit. Hopefully, we should be able to get that.
Okay, but so concluding on this question per se, Surat is a better realization market for us, net of freight from clinker from anywhere, but Surat is a better, at least as of now, we see it as a better realization or profitable market for us.
Yeah.
Understood. Sir, second question then was, you mentioned about the railway sidings that are coming, I think, next year, as you said, Q3 or Q4, and the conveyor belt. So these will lead to what kind of savings do you anticipate? Thank you.
So, of course, I think we'll be able to reach out to some of the high price market, one, because right now we do not have access to some of the high price market of West. Second, I think is going to be incoming, raw material also is going to be cheaper, right? Third is we also transfer, clinker to our grinding station of Cuttack, right, and Amethi. So that is also going to, help us in reducing cost. So these are the, immediate benefit which I see we can get out of this railway siding.
Helpful. Great, sir. Congratulations on good set of numbers. I think sequential improvement is really something that we all were very happy to see. So thank you so much for the opportunity and all the best.
Thanks, Naveen. Thank you.
Thank you. The next question is from the line of Mr. Shri Kirloskar from BOB Capital Markets Limited. Please go ahead.
Yes, hello. Thank you, sir, for the opportunity. I have two questions actually. Number one, if you can share the differential for premium product and normal grey cement in terms of pricing and EBITDA.
So the normal and premium, the difference at EBITDA level is about somewhere, depending upon the market, on an average about 250 rupees.
Okay, and on the pricing, sir?
Sorry?
On the pricing front, what's the differential? In terms of EBITDA, it's 250.
In different market, different gap, right from 20 rupees to 25, 27 rupees for bag basis.
Okay, got that. So my second question is, in our last conference call, we had spelled out on our peak net debt to EBITDA, which is around 3x. Does the guidance remain the same right now?
Sorry, can you repeat your question?
Sir, in our last con call, we had spelled out the debt to EBITDA ratio of around 3x. Does the guidance for that 3x still remains the same?
Yeah, guidance is a long-term guidance. When we do projects and a future expansion or acquisition, we try to keep that within that norm. So norm and that guidance doesn't change on a quarterly basis. That remains the same.
Okay, that's true. That helps, sir. Thanks a lot.
Thank you.
Thank you.
Due to time constraints, we have the last question from the line of Mr. Parth Bhavsar from Investec. Please go ahead.
Yeah. Hi, sir. Sir, thank you for the opportunity. So I wanted to know what was the clinker production and cement sales at UCW for the quarter?
UCW clinker production in this quarter was 3.84 lakh tons. And what was the other question?
What was the cement sale?
Cement sale total was 4.68 lakh tons. And clinker sale of 0.92, total sale of UCW 5.59.
5.59. Okay, sir. So those are my questions. Thank you.
Thank you.
Thank you. I would now like to hand over the conference to Mr. Vaibhav Agarwal for closing comments. Please go ahead, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I'd like to thank the management of JK Lakshmi Cement for the call, and many thanks for joining the call. Thank you very much, sir. Yashasvi, we now conclude the call. Thank you.
Thank you, Mr. Vaibhav, and all the parties.
Thank you.
Thank you.
On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.